In this video, we are going to talk about retained income. What is this? What is the retained income in accounting? First of all, we are going to first understand what is to retain. To retain is to keep. We say to retain is to keep. What are we keeping? We are keeping income. Income, as you'd recall, it's money that you generate from your operations. So retained income is when the company keeps money that it has generated from previous operations. So you can also say this is the same as accumulated profits from previous years. So the retained income account is an equity account, as you'd recall from the accounting equation that A is equals to E plus L. We say that assets increase on the debit side, they decrease on the credit side. And then equity and liabilities, because they are on the other side of the equal sign, they have the opposite effect. So they will increase on the credit side and then they will decrease on the debit side. So we say that the retained income, these profits from previous accounting periods, we say that they are an equity account, so they basically increase on the credit side. So this is how a retained income account would look. So you'd have your retained income, which is equity. It increases on the credit side, it decreases on the debit side. So the retained income is going to have an opening balance on the credit side. Let's say 100,000. So the opening balance of retained income account will be on the credit side because this is an equity account. So what would ideally happen is that this retained income, at the end of the year, it's going to be transferred to an account called the appropriation account. An appropriation account is a distribution account. So this is an account that we create to show the distribution of current and previous profits. So what I'm saying is that this opening balance at the end of the year, it's going to be transferred to an account called an appropriation account. So at the end of the year 2802, at the end of the year 28 Feb, these retained profits are going to be transferred to an appropriation account. That's where they are going to be shared. So this 100K will go to an appropriation account. That means that your appropriation account will be credited. Remember, the appropriation account increases on the credit side. So the appropriation account will be credited with what? With retained income. After taking this profit plus the current year profit, you are going to share this income amongst dividends, amongst income tax, and then whatever that is going to retain or whatever is going to remain is going to be transferred back to the retained income account. So for argument's sake, let's say your income tax is let's say 10K, and then let's say your dividends that were paid is 20K. So whatever is going to remain, okay, let's say 50 here. So whatever that's going to remain is going to be transferred back to the retained income account. We are still going to do the retained income account in detail, but what I wanted you to understand is that the retained income account is an equity account which increases on the credit side and decreases on the debit side. At the end of the year, the balance of the retained income account is transferred to the appropriation account, where it's added with the current profit. And then after adding them, of course, here you have 150k, and then here it's going to be 150k as well. Here it's going to be 150k as well. So as you can see that the credit side is more than the debit side. So the 150k is going to be used to pay for income tax and then also pay dividends. Whatever is going to remain after paying the government and also paying the shareholders is going to be transferred back to the retained income account. So here it's going to be 150 minus 50, which is 100, minus 10, which is 90. So the 90k is going to be transferred back to where? It's going to be transferred back to the retained income account. So now that means that your current balance here is going to be 90k. I'm not sure if this made sense to you. I'm going to just reiterate for the last time. The retained income account is an equity account. That means that it increases on the credit side, it decreases on the debit side. Right? So what I'm saying is that at the beginning of the year, or rather at the end of the year, the balance that is on your retained income account is going to be transferred to the appropriation account, where it is going to be added with the profit that was generated in the current year. The total will be shared amongst income tax and dividends, or the total will be used to pay for income tax and also pay for dividends. And then whatever that remains after paying income tax and dividends is going to be transferred back to where? It's going to be transferred back to the appropriation account. So if you check here, that means that your retained income has grown or has went down from 100k to 90k. So thank you very much. We'll see each other on the next video. Thank you.